What's next? To better understand the gravity of the situation, we need to take a closer look at history and how previous financial crises have impacted the world. In a recent discussion about the current state of the economy, a concern was raised about the possibility of a large economic bubble, with modern nations like Japan, the United States, and Europe printing money on a scale that has never been seen before. Many are worried about the potential consequences. One issue that's risen in other countries that have printed too much money is that it eventually causes significant trouble. Although it may still be a long way off, we may be closer to this trouble than we have been in the past. While the recession that followed when Volcker took the primary rate to 20% and the government was paying 15% on government bonds was horrible and lasted a long time, it may be a good thing in hindsight that he did it. However, it's unlikely that modern politicians would be willing to permit a new Volcker to get that tough with the economy and bring on that kind of a recession. The troubles that we're likely to face may be different from the old troubles, and they could be worse and harder to fix. When Latin American countries have printed too much money in the past, they ended up with a strongman and other issues. The same thing happened in the early Greek city-state democracies, where a lot of equality led to demagogues and the demographics lathering up the population, and pretty soon, they didn't have a democracy anymore. Although we don't actually know how bad the troubles will be, we're flirting with serious issues. Some of our earlier fears were overblown, and Japan is still existing as a civilized nation, in spite of unbearable excess by all former standards in terms of money printing. It's seductive to have a bunch of interest-bearing debts and pay them off with checking accounts, which are no longer paying interest. However, when things get that seductive, they're likely to be overused. In life, there are times when we have to swim against the tides, and investing is no different. Rather than predicting short-term differences between the Russell and Standard & Poor's indexes, it's best to look for something that's good enough to invest in. It's not about picking one index over the other, it's about focusing on the long term. Whether you're investing in stocks or real estate, there will always be periods of agony and boom, and it's essential to learn to live through them. As Rudyard Kipling said, treat those two imposters just the same. Night and day come and go, and sometimes it's a boom and sometimes it's a bust. The key is to keep going and do as well as you can for as long as you can. Passive investing has had a huge impact on stock valuations, with a new group of emperors emerging, those who vote on shares and index funds. This transfer of voting power to passive index funds will change the world, but it's unclear what the consequences will be. It's predicted that the outcome won't be good. Despite the challenges, we live in a strong economy and a technically advanced civilization, and that's not going away. The rise of robots in modern factories is inevitable, and it's happening in China too. Although it may create adjustment problems, the trends are here to stay. If you find yourself a union job and get replaced by a robot, you'll have a difficult problem. If your company invents something new that makes you obsolete, you'll have a problem too. The solution to these problems is not always easy. While it may be tempting to print more money and solve the temporary problems, this can have long-term dangers. We've seen what happened in Germany when they kept printing money during the Weimar Republic, and it contributed to the rise of Hitler. We must be careful and take these problems seriously. We can't have politicians just doing whatever's easy in the theory that it didn't hurt us last time. It's time to face the challenges head-on and find sustainable solutions. Warren Buffett, the CEO of Berkshire Hathaway, has said that continually doubling spending without any discipline could lead to dangerous situations. However, he doesn't believe that Japan is in any terrible danger, despite their large amount of spending. When asked about hoarding cash, Buffett believes in investing in the best thing available, rather than waiting for better conditions. Although Berkshire Hathaway has excess cash, they're not investing because they can't find anything to buy at a price they're willing to pay. Buffett attributes this to the fact that other people are bidding up the prices, and a lot of buying is done by people who plan to own the investments. Private equity firms often buy things just so they can have more fees by having more things under management. Although it may be easier to buy something using someone else's money, Berkshire Hathaway prefers to use its own money. Buffett believes that nothing is worth an infinite price, even an admirable place like Costco. However, He argues that if we're investing for a sovereign wealth fund or a pension fund with a 30-50-year time horizon, he would buy Costco at the current price, as he believes it's a strong enterprise. Despite not investing, Buffett doesn't view it as a tragedy that Berkshire Hathaway has surplus money. He believes that they're more responsible with extra capital, which will be beneficial for shareholders who are worried about the future. Buffett encourages those who are worried to think in the right direction and worry about the right things. Berkshire Hathaway did purchase shares in Apple a few years ago, which has paid off well. However, they're not currently adding any new companies to their portfolio. This is due to the fact that they can't find anything to buy at a price they're willing to pay. Buffett believes that this is due to other people bidding prices up and not because Berkshire Hathaway is waiting for better conditions. Inflation is a serious subject, and its effects can be dire for a democracy. Once a population learns that it can vote itself money, it can quickly overdo it and ruin civilization. Even a long-established empire such as the Roman Republic saw its downfall after the currency was inflated for hundreds of years. If a nation deteriorates too much, it risks falling into the hands of dictators, as seen in Germany's case during Hitler's rise to power. A big government reaction is likely to occur in modern democracies in response to inflation. The COVID-19 pandemic has seen governments throw money at the problem, which was likely the right decision, although it may have been overdone. We should be optimistic about the competency of our technical civilization, which has made enormous progress in the last 100 years, largely due to the distribution of electricity, modern medicine, the automobile, airplane, records, movies, and air conditioning. However, with the basic needs already met in the United States, people tend to focus on envy rather than greed. The fact that everybody is 5 times better off than they used to be means they take it for granted, and all they think about is someone else having more than they do. Envy is built into the nature of things. In terms of individual investing, one should aim to choose the least bad of the bunch of options available. Investors can buy quality equities, Berkshire Hathaway stock, Costco stock, Chinese stocks, and a little bit of Daily Journal stocks, as well as investing in apartment houses. The safe consumption for an investor is that over the next 100 years, the emerging market currency is likely to go to zero. It's advisable not to fall into the trap of pretentious expenditures, which only serve to drive demand in our modern capitalist society, leading to dissatisfaction. To achieve true happiness, one should avoid pretentious expenditures and not envy others' possessions. That's all for this video. Hope you liked it. If you did, hit the like button and subscribe to Monetary Watch, and turn on the notifications so you never miss another video. See you in the next one. Till then, take care and thanks for watching.